I'm Felipe Witchker. My grandfather was a sugarcane processor in Cuba. I grew up in the cornfields of Nebraska. I'm coming to you now today from the former tobacco lands of North Carolina. I actually had the blessing of growing about 30 of these squashes and harvesting them this past month. And before we get into conversation about capital and cooperatives and finance, such an intermediated space with so many different levels, I think it's important to ground us in a different question about soil and earth and where we come from. So I want to start with this quote from Rilke. In spite of all the farmer's work and worry, he can't reach down to where the seed is slowly transmuted into summer. The earth bestows. My co-op journey started about 10 years ago when I launched the Community Purchasing Alliance. And over the past 10 years, we've grown to about 90 churches and schools in Washington, D.C., about 20 million in facility contracts and purchasing together, about $1 million in revenue. We've had 5 years of profitability and member dividends. And as I've tried to grow our co-op to Chicago, Boston, Ohio, and North Carolina, I found it relatively easy to get a $100,000 or $200,000 line of credit or a patient debt note. But when it comes to finding capital partners that might come alongside me in this profitable co-op with deep social impact, we've done 40 solar projects. We've helped facility managers everywhere switch to clean, more environmental practices. When I try to get larger capital partners to think about, help me see our strengths, help me see our weaknesses, my blind spots, and come alongside for a journey, it's been so much more difficult. So I've had to go to venture philanthropy. I've had to go to impact investing. And in each place, I find incredible intrigue. So many people want to take the meeting and have the conversation. But I haven't found the right fit, the kind of capital partners that I believe Rock USA was blessed with to grow from the New Hampshire project and demonstrations they did for a decade to growing to more than 30 states they now have, 250 transactions, resident-owned communities they've built this past decade. That to me is the kind of example I want to see dozens of this decade, maybe hundreds. And so while the fundraising has taken me outside of the co-op world, through Start.coop, I've begun to accompany other entrepreneurs, many tech-enabled entrepreneurs that I think should be taking a risk on. But I've seen their struggle with venture capital in the conventional investment landscape. So I've decided to leave the cooperative I've built, an incredibly difficult decision I've been through the past couple of years, in order to educate investors about the opportunities the cooperative landscape has for them today. So let's take a step back. Let's take a quick look at the overall GDP of our economy. And I'll make this visual prettier. But eventually, I just want you to point out that let's say we have the whole economy here. And let's say it's 30 trillion is the big circle. And let's zoom in on the small circle and say utilities. Their challenge is decarbonization today. Let's take a look at finance and real estate. Their challenge is also plagued with lots of turmoil. As the chair of the Business Roundtable, Jamie Dimon, a couple of years ago said, we're in a crisis moment. Interrelated health, racial, climate crises are forcing us to rethink the purpose of business, the purpose of our corporations. And as Doug McMillan, the current chair of the Roundtable, said, we believe that multi-stakeholder capitalism is the answer. And I want to focus in on that multi-stakeholder vision. Almost all of our dominant firm structures have capital stakeholders at the top. Cooperatives, we offer something different. Producers, consumers, we know it. The problem is we're such a tiny portion of that overall 30 trillion in GDP. Let's say we're in the tens of billions. And even of that, our co-op capital landscape that's supporting new co-ops, co-op development, growth stage co-ops, so much smaller. So let's zoom in on what that capital landscape really looks like. Put a little map together. As you see, Start.coop, Zebras Unite, NCBA, our co-op loan funds with Leaf and Shared Capital, Democracy at Work Institute, the New Economy Coalition, Impact Finance Center, RSF Social Finance, Philanthropy, Mission-Driven Finance, Quechua Fund, the Kendi Group. There's more than 7,000 family offices today that are super intrigued by all of this. Now, as we take a look at this co-op landscape, what I'm struck by is how many folks are in the $10 to $50 million range in terms of the assets they manage and steward. Now, how does that compare with the amount of retirement money that we collectively have? For example, I'm trying to think about a 30-year time horizon for my retirement money. And that brings up major questions about my conventional investing options. I think increasingly in impact investing, we're going to see a push towards livable future investing. Now, I'm going to come back to that in a minute. But right now, I estimate the total cooperative capital landscape is in the magnitude of $100 to $300 million. Now, what if over the next few years, we, the folks here in this room, were able to put together a $50 million guarantee pool to leverage a $500 million co-op development fund? What might that do for the potential and growth of cooperatives? Or let's take seed stage venture investing. I've had a good friend who's been a part of Techstars. She's a managing director there, led one of their cohorts. Over the past 10 to 15 years, Techstars has grown from one business accelerator, to now dozens, even 100 different cohorts that they run on a regular basis. And they come alongside with capital. And they have funds of funds and legal infrastructure that allows JP Morgan Chase to easily write a $100 million check, or larger groups to write much more significant amounts of capital because of the way it's structured through dozens of cohorts. And what's that yielded? Think about what venture investing has yielded from the seed stage early to the funnel of large businesses that have been venture backed and become very significant parts of our economy today. My question is, could we do the same for co-ops this decade? What would that look like? Well, I think you can all imagine some of what that looks like. I'm going to maybe focus on what holds us back from doing that. Now, we're all here because we care about Principle 6, co-ops helping other co-ops. The challenge for Principle 6 as a co-op business operator is, what's in it for me? What's my self-interest? What do I get? How does it grow the Community Purchasing Alliance by helping other co-ops, helping the broader community? When I think about that question, I realize why. The only reason I could see to want to invest in other cooperatives is if my tax statute was threatened in DC, or if the federal tax advantages that we get as co-ops was changed. That would unite us. That would bring us together. What if we could proactively imagine what challenges we might face over the next 10, 50, even 100 years, and how we can position ourselves as a unique structure in the business structuring landscape to really structure for the future, to structure to offer livable future alternatives to dominant capital stakeholder, capital supremacy business structures. And one of the pieces that's turned me on to this is human rights attorneys, human rights lawyers from Harvard to Oxfam to Amnesty. They have said very clearly that the current publicly traded company model can't operate and respect the human rights of communities, our planet, much less future generations. And I think mainstream business has begun to interpret that they need to evolve their governance and ownership structure too. I see an opportunity in finance and investing and as cooperatives to say, we have something to offer this conversation. My quick estimate on ESG impact investing, and I'll show this later, is that roughly we're at maybe $1 trillion in impact investing today. But I think this decade we'll get to 10 trillion. And I think the next decade, it'll be even more. I think alternatively structured governance and ownership, like cooperatives, can be the gold standard for impact, can be the gold standard for ESG. It's not just a B Corp we have to follow thing, which is important. And we've seen the massive adoption of B Corps. I think to structure it into the governance and ownership, people will have to look to cooperatives. Do we take a proactive stance to promoting our business structure model as something that could be useful to the broader landscape? Let's also ground ourselves in the carbon realities. There's 35 gigatons of carbon we emit every year as a planet. 225 gigatons is the upper ceiling that we can emit. That leaves us less than a decade. And the balance sheets of oil companies, the proven reserves, the market capitalization is based on them burning at least 2,000 gigatons. This is the carbon math that hasn't been internalized into our capital markets today. As a co-op entrepreneur, I wish I had a co-op development fund that would help come alongside me, a co-op development landscape that would say, yes, Felipe, we will help work with you to bring your co-op to scale, bring it to 30 regions, help meet the cultural appetite for the model you're offering. As you're going to hear from Greg, Astrid, Blake, Joseph, there are dozens and dozens of other folks out there like us. And many of them get frustrated, not finding the resources they need to make their co-op work. Molly Hemstreet's one that has. She has more than 100 workers at her worker-owned Opportunity Threads, and 500 more part of her producer co-op textile mills in North Carolina. Tim Hewitt has 200 worker owners, a part of his franchise bakery chain in the Bay Area, California. As an emissary from the emerging cooperative landscape and ecosystem, let's take this opportunity as a co-op sector to really invest in our model, to invest in developing new ways that we can capitalize a cooperative future.